Many thanks to Janet for her introduction, and I won't repeat that, but I think Robert has had an extremely distinguished career in the capital markets, has been head of the UK DMO, raising over 3 trillion sterling during his tenure since 2003, and will be retiring at the end of June. I think Robert also has a long career prior to that in the capital markets as a banker himself. So I think a multifaceted career and background. It's a great pleasure for us to hear from Robert before he moves on. It's been a very, very close partner with ICMA for some time. So perhaps, Robert, we could maybe start with how your borrowing program has evolved. The UK is one of the largest sovereign borrowers in the market. If we rewind to 2003, the market was very different. I think funding programs were much smaller in size. So maybe you can just reflect a little bit on how the size has changed, how your strategy maybe has adjusted in terms of syndications versus auctions, etc., how the distribution and the investor engagement has adapted as well to some of the market developments over time. Interested to hear your thoughts on that.
Well, thank you, Bryan. Yes, I think to answer the question directly, it's got a little bit bigger, just a little bit. I mean, you're right. When I was fortunate enough to join in early January 2003, what the Debt Management Office did in the UK, and actually there are a lot of parallels here to all the other major sovereign borrowers, the whole area was a little bit of a backwater. If I thought I was going to have the quiet life, I was rapidly disappointed. Actually, perhaps not even so rapidly, because actually when I joined, just the end of the financial year, 2002, 2003, we were borrowing, I think it was something like 24 billion a year, issuing 24 billion a year. The entire value of the portfolio actually was 300 billion. The other statistic I always like to throw out is that the entire borrowing of the United Kingdom, historically, its issuance since 1694 was actually about 365, 370 billion. And as you say, we've now done a little bit over 3 trillion. So it's a growth business. But perhaps not quite the way we would like it. And the market has changed fundamentally. I mean, you pointed to a couple of things. You talked about, you hinted at the way the market has become larger. It has much greater depth. It has, thank goodness, and I stress this because otherwise we would have never been able to fulfill our mandate. It has become much, much more liquid. And it's become more liquid because there are more participants, it's richer, and it's of a different nature, completely different nature. We used to run, at that time, we just had auctions. We didn't have any other way, really, fundamentally, of issuing debt. And it was with the onset of the financial crisis that things began to change in such a way as one actually sees today, where we started to introduce syndications. We tried it once before in 2005, but the program of syndications only actually started in 2009. And that was because the borrowing requirement then suddenly rose dramatically as a consequence of the financial crisis. And we've always tried to make sure that the overall offering and the way we approach the markets is one of collaboration with the markets. I think that's really, really important. And if there's some message that I'd like to convey for the future, it is we must never lose sight of that, because we need to work with the market in order to achieve our objectives. We also need to be, the expression that debt managers like to use a lot is predictable and transparent, which means we try and be utterly boring. In my case, that comes naturally. But it is fundamentally essential that we ourselves are not the cause of surprises. There are other causes, as I say, financial crises, pandemics, political developments, whatever. They may cause crises. if the market views us as a borrower as being reasonably predictable, a known quantity, then it generally tends to work.
Okay, great. Well, I think you certainly succeeded in being predictable. And if boring in a good sense is what you were looking to achieve as well, I think that's been the right outcome. But at the same time, you know, I think the UK DMO has been quite innovative in many ways. And certainly when we look at things like the sustainable finance agenda and bringing green gilts into the program, again, that's been something that the UK has been one of the first sovereigns in terms of the development of that. How do you see that fitting into the agenda for the DMO going forward?
I'll make two observations. One is about innovation in general. I would like to think that where it has been necessary to be innovative, we've been innovative. And innovation fundamentally should be a means to an end. It should in itself not be the end game. And I just say that because very often, you mentioned my career, very often I remember it becomes a sort of buzzword. You know, we are innovative, and that sounds really good, and everyone thinks, isn't that wonderful, you're innovative. But unless you're actually innovative with a purpose, that you need to do something that otherwise could not be done, it's not obvious that there will be benefits from that. So I would like to think that we have the right mixture of being both cautious, conservative with a small c, but also innovative. So where it is necessary, because we need to achieve a goal, we will be innovative. That's the first thing. You mentioned green, and that took a huge amount, and it does for any sovereign borrower, a huge amount of preparation. And I need to pay credit actually to the Treasury, who have had to done a lot of the heavy lifting. For us, what was essential with our green program was not necessarily to be the first. We weren't the first. Not necessarily even to be the biggest, but to make sure that our green gilt, green issuance program became immediately part of the core funding program. What we did not want to have is some part of the program that was niche, that was stranded, that was isolated. So we are still, right now even, as recently as just a week ago, continuing to tap the same two bonds that we first issued back effectively now, well over 2 years ago. So that was incredibly important to us. And the only way we can make the green bond program sustainable, from our perspective as a debt manager, is if there is no negative price or pricing disadvantage that makes the product uninteresting.
Right. No, interesting and you know, important, as you say, to make sure that that's consistent and mainstreamed in your approach to the market and not looked at as an ad hoc venture. Now, I think going back to 2003 again and looking, you know, 20 years plus to where we are now, you have had to navigate multiple challenges as part of your tenure in the office. The global financial crisis, the European sovereign and banking crises that we faced, Brexit obviously being one of the major dynamics from a UK perspective in recent history, COVID, the speed of the rate hikes after the inflation scenario developed, the mini budget issue, which is, you know, very much still fresh in our minds, and clearly the invasion of Ukraine. I mean, multiple really challenging situations to navigate around. You know, you're interested to hear which of those perhaps have provided or presented the greatest issues to you. Maybe I would focus specifically on the recent mini budget and the LDI outcome, and also Brexit, with both being quite UK-centric in nature. But it'd be interesting to hear how you were able to navigate around them. I think you know, yourself and the team at the DMO have always been known for a very calm demeanor and great professionalism, but I'm sure there was a lot of flapping under the surface, as they say, in a number of these very challenging situations.
Okay, so if you were to phrase the question, which of those was the most challenging? Actually, and this might come as a surprise, I would say in this order, the financial crisis, the pandemic, COVID, and then the mini budget fallout. Why? It was in the financial crisis that the borrowing requirement for the very first time dramatically increased, at the same time as we had the introduction of QE. There was therefore a completely different dynamic in the market, a huge amount of supply coming from us, and another part of the market, in this case the central bank, providing a lot of demand. The market needed to find a very different equilibrium. And we needed to approach the market in a different way. We'd gone from having an auction, as I say, literally, sort of once every 2 to 3 weeks, to sometimes having them twice a week, all the sorts of things that we're currently used to now, we were not then. That was the first thing. Pandemic, the sheer scale. And just to put the pandemic in perspective, the financial year that began on the 1st of April, 2020, we had the budget a few weeks beforehand. A few weeks beforehand, it was predicted that we would be issuing, I think it was something like 100, if I'm correct, 130 something billion. As is known, we ended up having to do nearly 500 billion, 485 billion that year. Those were challenges, but for us as an office, they were challenges also in a logistical sense, because half these things we had to conduct from home. As did the market have to work from home. That introduced huge internal compliance challenges, all sorts of other technological challenges. And then you mentioned the mini budget. Actually, for us, I'm not saying that the mini budget wasn't significant. I mean, I cannot recall intraday movements on the scale that we saw then. The size of yield movements was literally extraordinary, literally, especially coming after a period where you barely saw any shift in yields. You know, so a couple of basis points a day would be a significant move almost. Well, that was obviously off the scale, but throughout, the operations worked. And I think they worked because the market was able to reprice itself. And it did so with remarkable speed. That was frightening, probably, for the politicians. In a strange way, for us, it was reassuring. If the market had not been able to reprice, our job would have become virtually impossible. Similarly, on the way down, or the way up, depending how you look at it, down in yield, the market adjusted very, very quickly afterwards, and normality resumed quickly, too.
No, I think you're right. There was a very speedy kind of recovery in many ways in terms of a reset, but also a stabilization. Obviously, I think the Bank of England's actions were very helpful as well. And they put some policy steps in place, obviously, to help the robustness and resilience of the market as we look ahead on that theme, which is very important now, I think.
And I should just say, because I do think it's important, the Bank of England's intervention for financial stability reasons in the market over a year and a half ago now was, I think, a terrific success, and one of the things that the bank has probably not in the media received enough praise for. They went in and they went out very quickly.
Yeah, great. I think we are already running over time a little bit, but I think, you know, you have so much experience in the market. Obviously, with your successor, Jessica, I'm sure you're able to give her plenty of good advice as to, you know, some of the things that she should be looking at. But what would be the one piece of advice maybe that you would give to the audience here, or to Jessica, or any of your peers for that matter, just to kind of leave us with?
Probably what I mentioned before. I mean, Jessica doesn't need it. She's going to do a brilliant job in any case. And she knows this, having worked with us for 9 years. But it is this point about the market. Work with the market. The market has to be on your side as a borrower. It doesn't matter whether you're a sovereign borrower, a corporate, or whatever. It has to be on your side. You need to work with the market. You mustn't be captured by the market, but you need the market to understand, and you need to some extent, educate the market and listen to the market. I do think that we actually can listen very well indeed.
Great. Well, Robert, thanks again so much for your time. I think you leave an incredible legacy, actually, with all of us in capital markets. In a very, very positive sense. We know that you'll be retiring, but I hope you stay engaged with the market, and you know we can enjoy further conversations with you in due course. So thanks very much for your time.
Thank you, Bryan. Thanks very much.
Thank you.